Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Market Wrap, where we talk about the biggest moves in the markets this week and what is driving them. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, senior reporter at Bloomberg and author of the Money Distilled newsletter.
Okay, well, John, when we talk about what's driving the moves in market this week, I have much doubt there. I will say before we get going that you and I are speaking before President Trump speaks at Davos.
Yes.
So he's been saying a lot of things this week, a lot of social media on the go, a lot of messages, a lot of publishing of other people's messages, a lot going on, but he hasn't actually spoken yet. So there may be some fairly massive market moves when he has finished speaking.
Yeah, and he has been a busy boy this week. Although actually he's not the only thing that's moving markets. It's actually the Japanese election promises that have been moving markets in quite an extraordinary way at the start of the week.
This is interesting, isn't it? And you might think, looking around the world geopolitically, that the most important thing would be the idea that America might annex Greenland against the will of the rest of the world. But in fact, Japanese bond yields have had more impact.
I think actually it's probably worth starting with this, and then we can talk about Trump, because what happened in Japan is the Japanese bond market yields spiked because the Japanese Prime Minister there has called a snap election to shore up her power. Clearly hasn't spoken to Theresa May recently.
Yes, she clearly hasn't seen what happens with snap elections elsewhere. But anyway, on we go.
And of course, you need to bribe the electorate whenever you're going to go for an election. And one of her particular choices being to say, well, look, for the next 2 years, we're going to knock off the equivalent of, Japanese VAT, the sales tax on food. So it's currently 8%, reduce it to 0%. Now, the thing is, obviously, Japan has got a massive kind of debt to GDP ratio, and markets are sort of going, well, wait a minute, how are you going to pay for this? And she's sort of saying, well, we're not going to have to issue more bonds to pay for it, but she hasn't actually said how they will pay for it. And the other thing is that the opposition parties, no one's saying, oh, that's a really daft idea, that's really expensive. Instead, they're all competing to, say, make even greater promises. So, oh, well, you'll scrap it for 2 years, we'll scrap it for good. Oh, how about we actually cut the entire VAT in half from 10% to 5%? And so there's this sort of almost arms race.
Yeah. Well, it's interesting, isn't it, that the natural state of a democracy is generally inflationary, right?
Yeah. Yeah,
I was reading about this the other day. Obviously, you know that democracy is naturally inflationary, but the point was that capitalism is naturally deflationary. Right? Capitalism tends to bring prices of stuff down over time, and so there's a constant tension across all types of capitalist democracies between the democracy side, which is inflationary, and the capitalist side, which is deflationary. And that deflationary side has been winning in Japan for a long time.
Yeah.
But now the naturally inflationary side of a democratic society is rising to the fore.
Yeah, and that is, that's really freaking people out because, by our standards, I suppose Japanese inflation isn't that high, or certainly not compared to what we've got used to. That is actually an interesting point, because I think the problem with any form of rule actually is that if your economy stops functioning properly, then your way to keep the vested interests and the people happy is always inflationary. But, ancient Rome was not a democracy, but it still kind of destroyed itself through currency debasement and hyperinflation. So I don't...
Over a tangent, John, over a tangent.
I know. I like to defend democracy because there are too many people who are against it at the moment, and I'm a bit kind of worried about that.
I am very pro-democracy.
Oh, no, I know you are.
You are very pro-democracy.
Yeah.
Everybody in our studio here is pro-democracy. Just checking with the producer. Yeah, we're all good.
Cool. So
you can leave that for now, John. Back to bond yields.
Bond yields. Yeah, so anyways, the Japanese bond yields spiked. Like the 40-year went above 4% for the first time ever. They were only issued in 2007. Japanese 10-year went above 2%, which we haven't seen for decades. And it kind of spilled over into the rest of the market as well. And so... it's just another reminder that, bond yields are jittery, political risk premia, and that all, obviously, Greenland feeds into that. The kind of chaos, if you like, feeds into that.
But rising bond yields in Japan affect the rest of the world, right?
Yes.
They push up bond yields everywhere a little bit, and also create the risk that capital that has long been flowing out of Japan looking for higher yields will flow back into Japan because you can get the yield there, and that pulls capital out of all of our economies and could have as yet unknown effects.
Yeah, definitely. I mean, in August 2024, there was a big kind of surprise crash in the market, and that was driven by this same thing, basically the reversal of the yen carry trade. And one thing that's interesting, I think we both get the BCA research, but I remember there's a chap there pointing out that basically the Mag 7 stocks had kind of moved in tangent with, I think it was basically the yen. And so one of the big trades that Japanese investors, basically the Japanese money going overseas, a lot of that has been invested in Mag 7 kind of big US stocks. So probably the US market is the place to kind of watch for any reaction, because a lot of people are now saying, well, actually Japanese government bonds look good value now because the yields are much higher than they were. If you buy into them, particularly if you think the yen's going to appreciate, then actually probably not a bad place to buy JGBs. And so once that sort of happens, or enough people think it's going to happen, then you might see a whole load of money sucked out of the US stock market and back into the Japanese government bond market.
I think given on your Mag 7 point, I think it's worth noting that the Nasdaq is down on the year already.
Yeah.
Down 1.2%.
Yeah.
Quite a big fall yesterday. So, maybe.
Well, I think it's interesting because people again sort of blame that, or the story is that this is all because Trump is kind of saber rattling over Greenland and all the rest of it. Actually, it's probably got more to do with the tectonic plates shifting because of the kind of what's happening in the bond market.
Exactly. I mean, there is this conversation going on in Europe, going, well, we can retaliate because Europe has $8 trillion worth of US bonds and equities, and we're going to divest, and we're going to this, and we're going to that, and there is a suggestion that this dynamic is already happening, which I suspect it isn't. Although we would expect a constant rebalancing away from the US, wouldn't we? If we look at last year and the US market hitting kind of 70% or 67 point something percent of the global index. And I suspect that peaked at the end of last year.
Yes,
and the rebalancing will be fairly consistent for the next decade.
Definitely. I mean, I think this all helps with the rest of the world catch-up story to the US, which should have happened anyway, because it's kind of crazy that so much global capital is in the US, is way more than represents sensible diversification apart from anything else. So definitely, obviously Trump is a catalyst for that, but it's a move that has been on the cards for a long time. And none of that's to defend, Trump's specific actions or his specific style, one way or the other.
Sorry, you don't have to do that. You know how every conversation we have at the moment with everybody there, anyone who says anything about anything to do with Trump, they have to preface it with saying, I'm not defending, but...
Exactly. But, what's Greenland ever done for us? So, exactly. So I think that's one thing we can actually quite comfortably say on Wednesday before Trump stands up has been a big driver and probably will continue to be a big driver, not just this week. And then there's gold.
Yeah, gold.
It's just kind of bonkers,
silver,
really.
John, silver.
And silver, don't even get on. Silver's like when sniffing distance at $100 an ounce now.
I
never thought I would see that.
Do you remember how excited we were when it went through 50?
Yes.
And we couldn't quite believe it when it went through 70. What are we going to do when it goes through 100?
Why don't I own any is my main question.
John, no. John, no Bitcoin, no gold. No, you must have some gold.
Oh, we've got gold. We've got some gold, yeah.
Okay.
Thank goodness. I can't have talked about it all this time.
Well, we have been talking about gold and silver for a long time, so I do hope that readers went and had a little look at their portfolio. And of course, now it's impossible to say what will happen next with gold and silver. Debasement trade, geopolitics going nuts, all kinds of crazy things happening.
One thing, and I texted you about this morning, Mark Carney gave a speech, and Mark Carney is probably almost the epitome of Davos man amongst politicians, I think. And he was saying essentially that, okay, everyone, forget it. The old rules-based order is dead. And I do not know what nature of contrarian indicator that is, but I feel that it's a it represents a peak of something. And, answers on a postcard from any listeners, but
it probably represents the final turning point for economies back inwards, where they start reindustrializing, start really focusing on energy security, on grid security, on all these things that we've been talking about for ages. And if you look at the investment implications of that, it just screams commodity supercycle.
I mean, it does, aye. Because if everyone needs to build their own stockpiles up, having run them down, because we all bought into what we're now told was a Potemkin village of, kind of wind turbines and solar panels, and everyone's lovey-dovey to each other. And anyone who objected to that was an idiot, but now it turns out they were right.
As a member of Trump's administration said at Davos yesterday, I think, what is up with Europe wanting to hit net zero by 2030 when they don't make any batteries?
Yeah.
So if you want that, you're going to need to build an awful lot of battery factories.
Yeah.
Or buy a lot of oil.
Or buy a lot of oil.
Or
buy coal.
The North Sea. Or buy coal.
Buy coal. Yeah, we still get plenty of coal in Britain.
Okay. This podcast is getting too old-fashioned for comfort. John, all this, the idea of money flowing out of the US and rebalancing of assets around the world, it has got to be good for the UK, right? We're still, the third largest stock market in the world, still over 3% of global equities market capitalization right here in London, biggest stock market in Europe, etc. And of course, the FTSE 100 last year was the best performing asset, the fourth best performing asset globally in dollar terms. So if you're looking to move money out of the US, you might think to yourself, well, do you know, the FTSE 100 doesn't look too bad, particularly given all those miners and all that old-fashioned stuff that nobody ever wanted before. They may now want. And the rally last year was very concentrated. A large part of the gains came from very few stocks. Lots of scope for that to broaden out. Lots of scope for it even to drop down below the FTSE 100. So while obviously all markets are off this week so far, it does seem that there is going to be rebalancing out of the US into other markets. The UK, while we are still saddled with a government that doesn't quite get it, may do reasonably well.
Yeah, I absolutely agree. I mean, you're right. If you're going to diversify out of the biggest stock market, the first place you look is the next couple of ones down on the MSCI Global, Tracker Fund. And the UK's there and Japan's there, basically. And interestingly, both of them have got relatively weak currencies compared to their history. So anyone who is an overseas investor can be looking at that and saying, well, actually, I might get a bump from the currency as well. I think the UK market in general is probably in good shape for the year ahead.
Yeah, and I say that we have a government that doesn't quite get it, but I think actually they are beginning to get it. There were some reforms announced at the beginning of this week to listing rules, etc., that make it easier for retail investors to participate in IPOs and secondary listings. So that there is movement here. There is movement,
and I think it's good. I mean, there's stuff about kind of bonds being more open to retail investors as well. So from that point of view, I do think somebody gets it somewhere. And the main reason they keep it quiet is because they know their core voter base is hugely suspicious of capitalism and anything that makes it easier. So those are good things. And I mean, it's weird, but yes, I think you can probably be quite upbeat on UK markets outlook for this year, certainly.
Anything else we should add? Keep a very close eye on Japan. Keep an eye on Trump. Watch Greenland. And pretty much everything that we have been talking about here for some time is coming to fruition, not necessarily in the way that one would have liked.
Yeah, but at least it's good for the investments that we thought it would be good for.
That's true. Silver linings, John. Silver linings. Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. This episode was produced by Samar Sadi, production support and sound design by Moses Andam. Questions and comments on this show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net.